Okay, guys, this is episode 55. I'm really psyched that we have a fellow nerd in the audience, Stephen Perrenod. I've been following him for years. We share a common friend in Shaheen Khan, who I went to undergrad with at Cornell, who had an amazing career at Sun Microsystems, and we reconnected, and Stephen put me in touch. Shaheen put me in touch with Stephen, and it turns out Stephen was very much into Bitcoin and into the quantitative side of understanding the power laws of Bitcoin. So we've been following each other for a while now, and now we finally have this rally. After the last bull market, after the bear market, now we have this rally So I'd like to thank Stephen for coming. Stephen is a PhD, a BA in physics, a PhD in astronomy and astrophysics, and has done work in large scale computing, and has one of the most underappreciated Twitter feeds I've seen. Like, the ratio of content to followers is probably the highest I've ever seen. And so big welcome to Stephen. And we got a cool presentation. So Stephen, just thanks for coming. And I'll share this presentation too.
Great. Well, it's great finally to be with you, Fred. And as you said, we've got this long-term connection through Shaheen. Today is Pi Day, so happy Pi Day to everybody. I wore the nerdy shirt, and I'm ready to dive in. Look, I think we've been in a bull market ever since we bottomed. So certainly since December, 15 months ago.
Right. Okay.
We're accelerating.
Okay, now I'm having some issues with this presentation. One second. Let me just see if I can just share the whole screen. Share screen. I see. Just share entire screen is what I want to do. Okay, here we go. Okay, so here we have the presentation, and we can go from here. So Shaheen, why don't you walk us through this presentation?
Okay, that was a Freudian slip. I'm not Shaheen, I'm Steve.
Excuse me, I'm sorry, Steve. Sorry about that.
No problem, that's our connection.
Okay, good.
So title is Power Laws of Bitcoin. I haven't found any better way to represent the price and market cap behavior than a power law. I'm not the one that first did it. We'll talk about that. And then a subtitle, how can an S-curve be a power law? And we'll get into that. And, you like to have simple models if you can. It's not always possible to have simple models, but Occam's razor says you'd like to be simple. So we've got this quote from Feynman. We'll move to the next slide.
Okay.
Thanks. So that was my rather brief time in the finance industry. In high school, I was an assistant working at the bank. Hartford National Bank went through 3 acquisitions and is now part of Bank of America. And I was also their youngest teller one summer when I was in college. I was their youngest teller ever. And that was the end of my finance career. So I'm older than Michael Saylor, and I'm younger than Feynman, who I never met, but I did see him on the wall every day when I went up the stairwell because his picture was there. We were in the same fraternity at MIT.
A little aside, my grandfather knew Feynman. They were both at Caltech together.
Yeah, very nice. Very nice. Yeah. So I started out in astrophysics, went through my postdocs, and then I thought it might be good to go into the real world. It was also a very tight job market. So I basically went into the high performance computing industry around 1980 and spent, the rest of the 20th century and the first decade of this century, 3 decades in high performance computing, and left the corporate world about a decade ago and have been doing technology consulting. At Sun Microsystems, I did work for Fred's college roommate, in UConn, and I continue to work with him. He's the founding partner for OrionX.net is the website, and I'm an analyst and partner there. Next slide, please, Fred.
Yeah, there we go.
So this is just the outline. I want to talk about block time first. I like to do most of my models in the natural calendar system that Satoshi invented. I've written some articles kind of elucidating that, but it was Satoshi's creation. And just like our own calendar, it has elements related to the Earth, the Moon, and the Sun. Then I'll talk about the Lindy Effect, and then get into the power law model, which I kind of decided grew out of the Lindy Effect.
Right.
We'll talk about S-curve models. We'll also talk about positioning sizing with Kelly Criterion, and if we have time, what about utility? And why don't we do what Timmer does at Fidelity, and model basically based on Metcalfe's law and network effects.
Perfect.
Next slide. Next slide, please.
Right, here we go.
Okay, so what is it? It's a time chain, right? So the hash of the previous block gets loaded into the current block and gets hashed in, and that's how everything gets linked up. And we're going to reach 840,000 for block height when we hit the fourth halving around April 19th or April 20th in just about a month. So I won't go through all the details of what the block calendar looks like, but basically we have these 4-year cycles. Each one has 210,000 blocks. We're going to be at the end of the first 4 when we get to 840,000, and be starting the 5th cycle when we get to the halvening or howl finning in April. And you divide those into 4, and you have block years of 52,500. We're at the tail end of the 16th block year now. We have a little over a month to go in block months. So each block month is equal in the way I like to look at it, and each one has 4,375 blocks. And I think it's important to use this as a temporal basis, because halvings and difficulty adjustments happen on block boundaries.
Correct.
The difficulty adjustment is every 2,016 blocks, which is about a fortnight. Now, early on in Bitcoin's history, the block time was running quite a bit faster. And if you go back about 4 or 5 years ago, it was still faster, but not as much. And so we had the halvings move from November 2012, then move several months to July 2016, and then the next one was in May of 2020. So you can see it was speeding up. It was running faster. So the blocks were averaging less than 10 minutes.
Right. So we have 15 years since 2009 but now we're at 16 years in terms of block time. So it's a little bit faster, right?
That's right. And for a while we were running 2 weeks faster. But now and that was per year. And now we're just running about a few days faster per year. Okay. So it's become more stable, shall we say.
Okay, let's go to the next one.
Yeah, so next slide.
Yeah.
So what is the Lindy Effect? This came up through Lindy's restaurant in New York, and the comics and show business people hung out there, and it had a long run itself, about 100 years, but it closed in 2018. But, they would have discussions and say, well, if the show's running on Broadway, for 12 weeks, or if a comic's got to run, for some number of weeks, then they're probably going to survive longer. Mm-hmm. And so you can apply this to technology as well. There's a little inset in the upper right. If it has a longer past age, you can expect a longer future longevity. Right. So formally, you write it as the expected value for the future time, which is the total time minus the current time, is equal to some multiplier times the current age, and P is called the Lindy proportion. Now, I did a quick estimate recently. I just used the annual percentage price gain as a way to do a P estimator, and took the geometric mean of all the values over the past 15 years or 13 years, because we didn't have price history early on. And you get a P value of about 2.4. So you could say if you believe that as an estimator,
Mm-hmm.
then if Bitcoin has survived 15 years, it should have another 36 years ahead.
Okay.
Now, I think most people on this call believe it's going to make it to age 50, in
Okay.
which case it has another 120,
Mm-hmm.
for that. So this, ironically, is been written about by Taleb in his anti-fragility discussions, even though he's no longer a believer in Bitcoin.
All right.
Next slide. So why try a power law model? It's natural in physics. Nature loves power laws. Gravity is basically, at least in the Newtonian domain, and over very many orders of magnitude, obeys 1 over r squared law. Electromagnetism does the same thing, actually to higher precision than gravity, as far as we know. The strong nuclear force has a 1 over r squared term, but then it has a cutoff, so that it actually has another term, which is like a spring stretching, and that's the quark confinement.
Mm-hmm.
And then the weak force is the same. It's got a 1 over r squared term, but it's also got an exponential multiplying it, and then it's got a 1 over r term. So this
So
is very,
all four of the fundamental forces exhibit power laws.
all exhibit power laws.
Wow. Okay.
Yeah. And even the inflation models for the very early phase of the Big Bang.
Oh, that's
So,
another great point, right? Because you're looking at kind of time. We look at time. So the current estimate of the age of the universe. Actually, don't remember it off the top of my head. Is it like 10 billion years? Is that sort of the
a bit more. It's 13.8 billion.
okay? 13.8 billion years. But the very first, the first 5 seconds of it, are also very, very interesting. So people are interested. What happened in the first, millisecond of the universe, right? And so you have to
Right.
look at it on a power law, and you really need to understand, how did the universe expand back in the very, very first seconds of the universe, right? And that's something that
Yeah.
astronomers look at, right?
Well, the hyperinflation period, which is just called inflation and should be called
Right,
hyperinflation, only
right,
lasted about 10 to the minus 33 to 10 to the minus 32 seconds at most.
right.
So a billionth of a trillionth of a trillionth of a second.
That's
And
incredible.
that took it from sub micro scale to macro scale.
Wow.
And it's been kind of coasting since then.
Okay.
All
All
right.
right.
Next slide.
Fascinating. Okay.
Okay. So this is the same model and the same regression fit. Two different ways to look at it. One's a simulog chart and one's a log-log chart. So on the left,
Right.
we have the simulog. And this is just a power law of time. But I'm using block years, and I've just told you what block years are. So it's price proportional to a constant times the kth power of the block age.
Mm-hmm.
And so we've got a log scale, for the y-axis, and we're running from when Bitcoin was only 2 years old and started having price discovery until 15.75 block years, which turns out to be January. So it's basically current.
Right.
And of course, the blue jagged stuff is the price history. These are monthly data points. So we've got, almost 16 times 14 data points there. And the black line is the regression best fit. And then we have plus or minus 1 sigma shown in the green and the red. And the standard deviation here is about a factor of 2. It's actually a
Right.
bit more than a factor of 2. So people should remember that. Then on the right-hand side, we have the thing that really
So
makes it look good.
just to slow down on that. Okay, a factor of two. What that means is that you can go you can go down by half to half its current price, or up to twice its current price, right? And you'd still
Right.
be within one standard deviation, right? So that would be entirely normal for this model to double or to drop in 50%.
2/3 of your data points should be in that range.
2/3 would be in that. 67% according to the normal
Yeah,
distribution, right?
68. Yeah.
Right.
Yeah. Okay. And, it actually it skews right. With this kind of model, it skews to the right too, which we like.
Okay. Yep.
And the other is a log chart. So here we're showing not only price as a log, but we're showing the age as a log. And so you
Right.
see that it starts at 2 years, it runs to well over 10, and in fact, it runs to 15 and 3/4 block years. And the green dots are the price history, and you just see a straight line. So if it's a
Which is, I
straight
mean,
line on a
this
log
one
chart,
here. When you see this chart, you can't unsee this chart, right? This chart is to me is the most compelling chart that I've seen in Bitcoin history. Is this exact chart? Looking at the
yes,
space in log terms, and you're looking at it and you're going, my God, it's a straight line, right?
right. So I should say I first became aware of this in late 2019.
Okay.
I saw H.C. Berger's work.
Mm-hmm.
And as we know, Giovanni did work in the power laws earlier, and you've had him
Yeah.
on already on
Right.
Spaces.
Yeah.
And he's also an astrophysicist.
Yeah.
Yeah. So his work
And
in
look, can you talk
gravitation.
about
Yeah.
the R squared, and what
Yeah.
that is, and what it is
Yeah.
0.94 significant or
Yeah.
not?
It's highly significant. You'll see it in the inset in the upper left. It's sorry for the small font, but the R squared, it's basically the same for both of these. It's 0.943. And that means that the correlation coefficient is about 0.96 to 0.97, right?
Mm-hmm.
So it's very highly correlated, and the F test is quite high as well. The F test is well into the 2000 something.
Explain again. Let's go explain what is an F test for people who don't know any statistics.
Well, it's just a measure of the goodness of fit. A higher F
Okay.
number is better, and you want it to be much larger than the number of points you have in your sample.
Okay, great. So
Yeah.
highly significant, not possible really, especially on a power basis like this, that this data would be random, right? The chance of that is zero, right?
Yeah. And we have, I run this through Stat Plus, and I'm not a statistician, but it produces a lot of other statistical results, including rejecting the null hypothesis
Mm-hmm.
for various tests and evaluating, the normality or the degree of skew on the residuals, and telling you what the error bar is on the slope. And the error bars are quite small.
Right.
Yeah.
I
So,
think just if people don't understand this, it's really I just want to slow down even one thing here. Can you just go tell what a logarithm is for people who don't understand logarithms? Because I was explaining
sure.
this yesterday, and I realized that the person I was explaining it doesn't understand logarithms. So can you explain what this logarithm is in base 10 here, or what that means?
Sure. So let's do it on the right-hand chart, the log chart.
Okay.
And it starts at 10 cents. And then
Okay.
you go up to the next one that's annotated as $1. Then it goes to 10.
$1.
Then it
Yep.
goes to 100. Then it
Yep.
goes to 1,000. Then it goes to 10,000. Then it goes to 100,000, and it goes to a million, where we're, kind of on a trajectory towards. So
Right.
it goes from under $1 to $100,000. So that is what? 5 orders of magnitude, 5 factors
Right.
of 10 multiplied one by each other. So the
Right.
log base 10 is equal to the number of factors of 10 that you have. So $1,
Perfect.
it's zero there.
Right.
That's the log.
Right.
$10, the log would be 1 in log base 10, and 100, its log base is 2. And so
Correct.
you can translate that directly over to the other one, the curves shown on the left. And you'll see
Okay.
the numbers that are actually the logs, 5 and 4 and 3 and 2, corresponding
Yeah.
to 100,000, 10,000, 1,000.
Thanks a lot. I think I just want to be completely clear on that. Let's go to the next slide.
Yes. Okay. So before we, get too excited, we do have to curb our enthusiasm a little bit. This is more physical than a model like stock to flow, because stock to flow, he said he found a power law, and I've done fits, and you do find a power law, and you can't actually reject it, but it's going to take sooner than the general power law model, because the stock to flow itself is already an exponential. It's increasing by a factor of 2 every 4 years. So it's a power law of an exponential, and it diverges very, very, extremely fast.
Right.
Now, what I'm charting here is the slope of the power law fit
Okay.
over time. So if you start at only 3 years of age and only use the old data in the first year, interestingly, the slope was about 5.5. It's about what it is today.
Right.
But then as you went to 4, you had a depression, you had this cycle, and it dropped down to 3, and then it shot up, when you had a big run up, it shot up to 6. And then it settled down. But ever since about year 8, it's been at about 5 or above. And it's become quite stable as you added more and more data to it. So that's
But
showing
one thing
how
I
the
would like
power
to
law
stop
index.
you. One thing I would like to stop you, Stephen, is you mentioned exponential versus power law, and just again because people confuse those terms often. Why don't you explain the difference between a power growth versus an exponential growth?
Sure. Well, the normal exponential is just e to the x, right? So that
Or
just says as x grows, you multiply by that factor of e 2.78128 each time.
right,
Or
right,
it could be an exponential of 10, right? It could be 10 to
yeah,
the x. And it just has a curve that, if we went back to the prior slide, it rises much more steeply
right,
than the power law does in the long run.
right. So it's basically like the difference between 2 to the power t and say t to the power 2, or 5 to the power
Yeah,
t and t to the power 5. These things look similar. They both have an exponent, but it's the question whether the exponent's fixed and then the thing under it is variable, or whether the thing moves in the exponent, right? So
right.
2 to the power x is like, doubling every it's a doubling, right? So this is like the grain of rice on the chessboard, and it just grows astronomically big, right?
I was
And
almost going to show that.
oh, okay, cool.
Yeah,
So that was the, that's just, so you were saying the stock to flow is actually kind of exponential, right? Because, the halvening, it drops by half every 4 years. So the reverse of that is the stock to flow goes up by a factor of 2 every 2 years, basically.
every,
Every
every
4
4
years.
years,
Yes,
but
yeah.
then it was a power law of that, so it was 2
Yeah.
cubed, so it was
Right.
a factor of 8, and eventually, you exceed all wealth on the planet, right?
Right.
Even a
Okay.
power law will do that, but it does it more gradually, so that's going to take us to X curve, and I'm going to talk
Yeah.
about how it grows right now. Can we go back for just a second?
Sure. Absolutely. Oh, yeah.
Okay, so um, with a power law, the expected gain, look, an exponential is compound annual growth rate.
All right.
So in finance terms, it's just compound annual growth rate, right?
Right.
So if you grow at 50% forever, that's an exponential.
Right.
With a power law, you get a gradual flattening of returns of the
Right.
expectation value
Yep.
of the fair value. So if we look 1 year forward with the K index 5.4 power law of where we are
Mm-hmm.
today, we would expect 39% for the next block year and 37% for the year after that,
Oh,
and
okay.
gradually
Oh, that's interesting.
decreasing. It's just B plus 1 over B to the K. Or for you,
Right.
Fred, the instantaneous growth is K over B, but you have to
Mm-hmm.
compound that.
Okay. I thought it
And
was a
when you,
little. I thought this is a little less than I would have thought. I thought it was more, almost closer to 100%. But
yeah, it's
okay.
not. It's
It's
not. And
so basically it's 40% right now is kind of
right.
the power law, right? Which
Right.
is still enormous, right? Obviously
It's
that's
enormous, and we
yeah.
can outperform that by a factor of 2 or a factor of 3 because
Right.
we're in the favorable part of the cycle and we've got this flood of ETF
Right.
money.
Okay.
And
Well,
the standard deviation in
yeah.
log terms is 0.315
Right.
across the whole span of data, and that's a multiplicative factor of just over 2.
Okay.
Now it's
Right.
settled down a bit, so the last 4 years it's more like a factor of 1.8. So
Okay.
next slide.
Perfect. Okay. Next slide versus gold. Okay.
Yeah, so here I am showing an exponential model in green against gold, and I'm showing a parallel model in gray against gold, and the blue jagged line is the BTC price, Bitcoin price denominated in gold ounces. And
And
as you
here
can
we can
see,
see
it's
very clearly the sort of the flattening out of the power law versus the
yes,
exponential, which is just boom. Yeah.
right. And actually, when I first started doing this, the exponential gave a slightly better fit, but now the power law gives somewhat better statistics. You
Okay.
cannot reject, you cannot falsify the exponential yet. The exponential has a 69% compounded annual growth rate and a slightly smaller R squared. The power law is to the 4.7th power. Gold has gone up a little bit, and the R squared is 0.87. And it's gone from less than zero point 0.1 ounce to now a kilogram
Right.
for
So
Bitcoin.
the takeaway from this slide is Bitcoin is outperforming gold pretty much on a power law, and really there's not a lot of reason for people to own gold at this point versus Bitcoin.
No, it's crushing it.
Okay, it's
And
crushing.
well,
Yeah.
look, it's on a trajectory certainly to take out the market cap of all central bank gold, which is about 2.5 trillion or so.
Mm-hmm.
And we would believe eventually to take out the entire market cap of gold.
Okay, perfect. All right.
Next
So the
slide.
next slide. Okay, S curve.
So this is a bit more complex. This is a
Okay.
technology S-curve model.
All right.
And, Fred had shown another model. And I had looked at that one. I didn't like it because it didn't go through the 0, 0 point,
No,
it
you
wasn't
have to
zero
shift
zero
it. You
time.
have to shift it.
Yeah,
There's a shift
yeah, I
parameter.
know. I
Yeah.
know. But I played with it, shifted, and it still
Yeah.
didn't give that good a fit.
No.
So I stumbled across the Weibull
Oh
uh,
wow. Okay.
cumulative distribution function, and it has this very nice property that
Okay.
you can do a linear regression, but what you have to do is you have to take the log twice.
Ah.
So it's a double log transform.
Okay.
And the function looks like 1 minus exponential minus t over characteristic times c raised to k. And guess
Okay.
what? K is this same power law index we're going to find out.
Oh wow.
Now, this is a normalized expression the way I've written it. But to fit it to the data, you really need 3 parameters. You need a characteristic timescale c,
Okay.
which goes into the exponential. You need a scale
Okay.
factor k, and that turns out to be like a power law index. And then you need an asymptotic value. What is it normalized by? And that asymptotic value could be an ultimate price or could be an ultimate market cap. I've
Right.
mostly done my regressions in ultimate market cap because it made it easier to kind of think about it.
Okay.
Now, this particular plot is for a $30 trillion ultimate market cap. And the
Okay.
way you should think about that is kind of in real value terms. In other words, what's 30 trillion today relative to, say, the national debt or the M2 supply or all global wealth, which is about 30 times higher at 900 trillion.
Right.
And this would exceed M2 of the United States, etc. It would double gold.
Right.
Um,
Double
and as
gold
you,
and equal to the debt of the U.S. Okay.
yeah,
Roughly.
yeah,
Okay.
roughly to today's debt.
Mm-hmm. Yep.
um, and as you can see, it's a very nice linear fit in
Wow.
this
Look at this.
thing, which is why is this double log transform?
Mm-hmm.
Now, in the inset, you can see the shape function of how the shape looks like. And it turns out that the green line is the
Mm-hmm.
one with k equal to 5. That's the one that's steep. So
Okay.
in relative terms, it rises quite quickly. And, we're certainly seeing that. Bitcoin's been going up quite quickly for the past 15
Mm-hmm.
years.
Mm-hmm.
Next slide explains this a
Okay.
bit more.
Okay, good.
Okay, so Fred's going to want to know this. How do you do the math? So what you
Okay.
do is you take the first log, and so now you have the log of 1 minus f equals the expression that was in the exponential.
Mm-hmm.
And then you multiply that by -1, and you take the log of it.
Okay, so
And
that's a
then
double
you
log
get,
here, yeah.
that's the double log. And then you get k times the log of t over c.
Right.
So now it's got a form of y equals ax plus b. You substitute y for the double log term.
Okay.
And that was what I was graphing. That was
Oh,
what
I
was
see.
shown on the prior graph. And then you identify ax plus b. And so x becomes log t.
Right.
And you set that to log t. And a becomes k, which was like a power law index or a scale factor.
Mm-hmm.
And b becomes minus k log of this c, which is the characteristic time scale.
Right.
And then you can linearly regress that. You can do it in Excel.
Okay, great.
I
Perfect.
use
Yeah.
stat plus. So we're regressing a double log function of the market cap versus the log of time
Okay.
and scaled to an asymptotic value. So what I do is I run a series of models and I pick different asymptotic market caps. And since I don't know what it should be, I do it at 1 trillion, 3 trillion, 10 trillion, 30 trillion, 100 trillion. Well, I already had to throw away 1 trillion, right?
Okay. Why?
So
Because we're past 1 trillion.
we passed it. We passed it already,
Yeah.
2 or 3 years ago. So here,
Okay.
this chart shows the key parameters. And the key parameters are the K shape, which is kind of how rapidly it rises, and C, which is the time scale. So you can see I've got asymptotic market caps of 3, 10, 30, and 100 trillion. And I've also included the parallel model. Well, the first thing
Right.
you notice is that the K shape is the same for all of these
Wow,
and
that's
equal
amazing.
to the power law model. And the one
Mm-hmm.
that has the highest R squared and the highest F statistic is the 100 trillion one and the power
Right.
law. Those are the two that have the best R squared and the best F.
Mm-hmm.
Now,
I mean, they're close, though. They're all pretty close, to be
they're all
honest.
close. They're all very good fits. You cannot discriminate between them.
Right.
So we have to wait and see. What it tells us, though, is that we're still well before the need.
Right.
And if you basically expand, take the linear expansion of this exponential term, you get f equals 1 minus t over c to the k equals
Mm-hmm.
t over c to the k. So it's just a power law
Right.
with the same k. So it's
Right.
basically a market cap going as the sixth power of time. And as long as power law holds, we're not close to the knee at age c. And the knee for any k is equal to 63% of the asymptotic value because it's just 1 minus 1 over e being the base of the natural number.
And so this Weibull distribution in kind of the very early phase that we would be in kind of currently, right? It's
Right.
almost the same. It's very similar to a power law in terms of its shape. Is that accurate?
To first order, it is a power law. It's exactly
Oh,
a power
to
law.
the first. So it's only the second order that it changes.
Right.
Okay, great,
Yeah.
perfect. So
And
that's
so what we
exactly
can,
that was my first.
yeah,
My first complaint about the power law is, this thing keeps on going up forever, and then this is
yeah.
an adaptation of that where it's not going up forever, Laura, as Michael
Yeah.
Saylor says. Okay.
Well, because I was worried about that. Now, it can go up forever. It can go up, eventually it can go up at 7% forever, right?
Right, and
Because,
it could go up because the denominator of the dollar, or whatever we're measuring it is going down. But ultimately, there's, it seems like you wouldn't have to say it, but Bitcoin can't be worth more than the entire wealth of the world, most probably.
right.
There does seem to be some limitation there. Okay, Kelly
$1
Criterion. Let's
quadrillion.
go.
Okay, Kelly
Yeah,
Criterion.
yeah, Kelly Criterion.
Okay,
One of my
so
favorite things in math, by the way. I love this.
good.
Yeah.
There's a huge volume, and I've read like half the papers in the volume, including
Okay,
several of
cool.
Kelly's original papers,
Okay.
several of Thorpe's papers, and
Right.
even you know some of the somewhat dissenting views. But basically, it's mathematically proven that if you maximize log wealth with the
Mm-hmm.
Kelly criteria, it maximizes the growth of your log wealth.
Right.
And so F is an optimal allocation. Now it gets difficult to calculate for a portfolio because you've got a lot of assets in the portfolio. So
Right.
I've done the simple thing, which is a 2 asset portfolio with just Bitcoin or US dollar cash.
Okay.
And if you wanted, you could use T-bills and say, okay, 5% or something, but it
Okay.
doesn't make that much difference because Bitcoin's performing so well.
Okay.
And then I did this over a 5-year time scale
Mm-hmm.
prior to August 2023, and I did it with different windows. So the
Mm-hmm.
point here is that the longer your window is, and what you
Right.
do with the Kelly criterion is you have to continually rebalance your portfolio so that you're always at the
Mm-hmm.
optimal frontier. And that frontier is defined by that equation in bold, F equals P minus Q over B.
Right.
Now, P is your percentage of wins. Q is
Right.
just 1 minus P. It's your percentage of
Right.
losses. And B is the average win size divided by the average loss size. And
Right.
that tells you what your optimal fraction or holding is in this case, Bitcoin.
Right.
You're assuming that the dollar is sort of the stable thing, and
Mm-hmm.
Bitcoin's the one that has a lot of volatility.
Right.
Okay, so for daily, let's look at daily. I had
Okay.
931 samples that were positive. I had 896 that are negative. So I have 51% positive, or wins, 49% losses. The
Mm-hmm.
sum of all the wins is 2285%. The sum of all the
Mm-hmm.
losses is minus 2000%. The average win is plus 2.5. The average loss is minus 2.3. And so the B here is just 1.08.
Okay.
And so then if you're going to rebalance every day, if you're a trader,
Right.
you're going to only want to hold like 5% in
Right.
Bitcoin.
5%. All right.
If you hold 6%, you're going to not make as much money as if you hold 5.7%.
Right.
Now, but if you go to weekly,
Mm-hmm.
your winning probability goes to 53%, and
Mm-hmm.
your average win is 7%, your average loss is minus 6,
Right.
and your B now is a little higher at 1.8, and now you can hold twice as much. You can hold 14%. If
Right.
you only make a decision to rebalance on a weekly. It took me a long time to discover this because I was just kind of working in the monthly space
Right.
and a little bit in the quarterly space. And then I looked at the yearly stuff. I said, what's going on? It's too high. So the
Right.
monthly, the average gain is much higher now, 4.8 with a ratio of 1.66. So you should
Okay.
hold 22% as
Okay.
your optimal F. And then if you only go quarterly, it's 35% of your
Okay.
portfolio should be in Bitcoin. Now, you don't have a lot of data points there, right? It's only
Right.
19.
Yeah.
If you do it yearly, you've only got 15 data points. So your
Right.
statistics aren't that great. But this is what it suggests.
Right.
It, I don't, I'm hesitant to show the annual numbers, but if you just annually rebalance, it would call for around 44 to 70% in your portfolio.
Right.
If you took an all-time window, the returns were really high early on. So should you include those? Probably not. You should
Right.
look at the last 5 years, and then you get something like a 44%.
Okay.
So that's your new 60-40, Fred. Uh,
Okay. So 40%, 60% cash, 40% Bitcoin. There we
yeah.
go.
Or
Right.
anything denominated in fiat. It's all the same, right?
Yeah.
Almost any stock, bond, the currency, it's all like
Right.
fiat.
It's all fiat. Right.
It's all fiat.
So 60% fiat, 40% Bitcoin.
And that includes real estate.
Oh, I forget. Yeah, you have to throw in real estate too. Yeah. Yeah.
So
Okay.
that's fiat. All right,
Okay.
next
All
slide.
right. Okay. So this, I would just say, this is a remarkable. It is very unusual
Yes.
to have done this thing daily, weekly, monthly, quarterly. I think this is a great result, actually. Great. Let's look at this slide.
Okay. Now, a lot of people typically wanted to model price and market cap using utility. And
Mm-hmm.
as we know, the thing that got everybody into trouble in this space, or at least in the crypto space, was they chased utility.
Mm-hmm.
And what we have is the premier asset on the planet, the finest, hardest asset ever created by mankind.
Mm-hmm.
Harder than anything created by nature, right?
Right.
And so, you know, I believe that the underlying fundamentals are scarcity and security,
Right.
not utility. Because if you imagine you have vessels and they're storing value, and then you go use something, it dissipates value. The
Mm-hmm.
faster we spend fiat, the more prices rise, the more inflation gets driven. In monetary terms, this is the velocity of money, right?
Mm-hmm. Yep.
Yeah. So fiat is designed for utility first. Bitcoin is designed for security and scarcity, and the
Um,
need that we didn't have for long-term value. And I did regressions on how are we doing
yep.
on time frame.
We're just fine. No problem at all. Keep on going.
Okay. So I did regressions for utility, scarcity, and security,
Okay.
and basically I regress price against the address count. And this is
Okay.
log price versus log address. And I use that as a proxy for utility.
Okay.
And then I regressed log price against log of the inflation and the supply, which is just the inverse of the stock to flow.
Well, okay. So this thing is interesting. The fact that you got almost two there, right?
Yes.
Which is, if you look at Giovanni's latest stuff, he sort of says addresses are growing at t to the cubed and prices growing at t to the sixth. Let's just
Right.
or 5.5 or whatever. But it's roughly there's a 2x difference in so a squared function. That would
Mm-hmm.
sort of indicate to me a little bit like Metcalfe's law, right? Which is, the number of
Yes.
addresses can be thought of as the number of nodes on the network, and the price is kind of measuring the square of the number of nodes in the network. Would you agree with that or no?
Yeah, I agree. This is basically showing Metcalfe's law.
Okay, so it's Metcalfe. Okay,
Yeah.
we weren't
Yeah.
we weren't crazy. Okay, so the
Yeah.
F test is 373, good but not great.
Yeah.
R
So the
squared's
next one,
89. Yeah.
yeah, the next one's scarcity is the same as the stock to flow. So the power law index is 3, except
Okay.
it's -3 because I'm using the inflation and the supply.
Okay. Right.
And then the last one is security. And there I use the difficulty. You could use hash rate, but just to kind of smooth things out, I use log P versus log D.
Oh, okay.
And
This one. Yeah. Oh wait,
yeah, so
this one. Yeah.
yeah, the third one. So that had, amongst the three, that had the best R squared and the best F test. And it was like the square root of, the security measure.
Right. So I think Giovanni sort of also came out. One of the other things I remember with he said, "Oh, this has a better fit than Bryce, right?" And you're finding the exact same thing using
Yeah,
a
yeah, no,
slightly different
that's right.
measure of security, but you're saying this fits better, right? Is
Yeah,
security fits better, right?
right.
Okay, interesting.
Then the last one is just the Lindy model. And when I did
Okay.
this comparison, this was actually done a couple of years ago, this particular one. And
Mm-hmm.
so I got a 5.65 at that time. And it actually has the best R squared in the F test. So I think it kind of subsumes all of these things into a
Right.
simpler model. So we're going back to the Feynman quote, right? The simpler model is working better for whatever reason.
Okay. So basically, it's working because it's been working for a while.
Mm-hmm.
The restaurant's been open for 15, 16 years, and therefore it's gonna stay open.
And everything organizes around that. So
Right.
the price organizes the miners, right? And
Right.
then you have the Metcalfe's law going on, and the feedback and the hash rate with the difficulty. So I've got this little double feedback loop up there. So next slide.
Oh yeah, that's the double. Let's go over the double feedback though. So
Okay.
the halvenings increase, time increases scarcity, which rises price, which increases the hash rate and increases the security. Okay, so that's that. Okay, cool. Next slide. The last slide, I guess. No, yeah, that's it. So
Oh,
money
that's
has,
it. Yeah,
yeah, that's it.
I've got a couple in the appendix. I don't know if we need to go
No,
into those.
let's just go to video. I want to just ask you a few questions. Okay, sort of your, how do we okay, so how do we take all this stuff into consideration, and it seems almost inevitable if I had to look at this that we're going. I keep on going. What's the ultimate? We're definitely going to Bitcoin 1 million, in my opinion.
Hmm.
Right?
Hmm. Yes.
It's you know, do we get beyond that? And it sort of would seem like, according to the power law, that might take. Let's just say on the outside, it might take a decade, right? On the outside, but it could be quite a bit faster than a decade. David Bailey, the head of Bitcoin Magazine, said it might happen this year. I don't know. Who knows? But things could go completely crazy. But if we had to pick a time, would you agree a decade seems kind of a rough thing? Maybe a little earlier for 1 million.
Yeah. Well, the 30 trillion model, which is the
Yeah.
closest,
Yeah. Okay. Yeah.
that's $1 million at year 27, and we're at year 16, so that's 11 years from now.
Okay. Oh,
But
11
all
years.
you need to do is get a small excursion above that, right? A
Right.
factor two would put you at 2 million instead of 1 million.
Right. So okay. So
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 yeah,
that's kind of the that's the goal. It's going to take us. People should be a little patient because everybody's like Fred. I was like, look, we could get to 1 million in a decade, and immediately people were like, Fred, you're too bearish. And
mhm,
it's like the power law does. It's not an exponential thing. We're not going to Bitcoin. 100 million anytime soon. I mean, it's not just, and it may never happen, right? It may never happen.
right.
So, you know, so that's the first thing is, you got to be patient, but still that's an enormous, increase from here, right? That's a 15x increase from here, 1 million. And
I
that's
I think you tweeted out today something like hyper Bitcoinization is when central banks start loading up on it.
right.
Did you tweet that out?
I did. Yeah.
Yeah. And I agree. And I don't think it's going to happen with the big ones first. It's going to happen with a few little ones first, right? It's not going to be the
Yeah.
ECB and the Fed
No.
or the Bank of Japan first. They're going to be laggards. But once it starts, it becomes a snowball effect. And so the question is, how much reserves do they need? If you take global M2, it's 100 trillion.
Yeah.
That's the global money supply.
So yeah, and I think if you look at another way to look at this is I think it was 1970, the market cap of gold was about the same as the market cap of the stock market, right? The U.S. stock market. So you have sort of gold stock market even, right?
Hmm.
Now the stock market is, multiple times as big as gold, right? The global stock market. It's maybe 10 times as big as gold, right? So, could we go back to a situation where the global stock markets could be the same as Bitcoin? Yeah, I think it's possible, right? And it may be likely, right? And that would sort of put us in the maybe we get to 100 trillion. You know what I mean? So it's not
Yeah,
crazy. It's not crazy to think that an asset like Bitcoin could be even to all of the stock markets combined. So
I think we're watching it start to happen in real time. We've seen it take out Buffett. We've
sorry for
seen it
this
take out
noise, but yeah, keep on going.
we've we've seen it take out Zuckerberg,
Yeah,
right? It took out silver,
right.
and it's now the eighth wonder of market capitalization in the world.
Yeah, sorry about that. Okay. So it's a
and it's climbing that list, and it's not going to be that long before it's the fifth.
okay. And so last thing is self custody versus these ETFs. Okay.
Mm-hmm.
You're I assume a self custody guy from way back when. Are you telling friends that people that you know, family members, people that you know to get into Bitcoin? What are you telling them right now? First of all, are you saying it's a good time that they should still get into Bitcoin at Bitcoin 73,000? Should they
Yeah,
should they
right.
dollar cost average? How should they get in? What should they do?
They should dollar cost average. Now, mathematically, buying all at once is actually the best strategy, but psychologically, it's not for new people.
Okay.
So dollar cost average is probably the psychologically best
Okay.
recommendation.
Right.
I had somebody ask me uh, just this week. He said, "Wow, where are we? The price is actually even a little bit above your model. What do you think?" I said, "Well, in logarithmic terms, it's not that much. But if you want a dollar
Right.
cost slightly less, you could. You should keep on DCAing." So DCA and HODL, I have my own idea about when this cycle might peak. I don't think the cycle's eliminated. I think it's being damped, and
Right.
we'll have to monitor the flows. Who
Let me
knows
ask you
how
this
these
on
flows are
the
going.
cycle side. So let's suppose we have a banger year, right, and it exceeds all expectations, and we
Hmm.
get to something like 400,000 or 500,000 in Bitcoin.
Hmm.
Do you think that you should use these kind of models, and not necessarily your model or Giovanni, but any type of model? Do you think it makes sense to portfolio adjust based on that, and potentially take some off at 500,000 with the idea of potentially getting back in later down the road, or do you just hodl?
Uh, well, people have to choose their time frame. Is their time frame a quarter? Is it a year? Is it a cycle? Is it a decade?
Let's say it's a
And
decade. If it's a decade,
well, if it's a decade, you would hodl through.
you just
You would
hodl through.
hodl through. Yeah. But the way I'm managing it to the Kelly criterion. That's my
Okay.
view.
Okay. So somewhere between 5% if you're just like a day trader, and and somewhere into the 40 to 70% if you're have more of an annual kind of
Yeah,
rebalancing.
I'm a Kelly annual guy personally because
Okay.
we start running out of statistics when we've only
Yeah.
got four data points otherwise. So,
Okay. Yeah.
yeah.
Okay. So I love this Kelly thing. I think this is really great advice. I think everything you've said is amazing. And I'm going to put the link to your Money or Debt Twitter account. Is there any other account you want to share, like website, or can everybody find you through the
Uh,
through the
Or-
through the Twitter?
Orion, OrionX.net.
Okay,
The
orionx.net.
Twitter
And
is fine.
okay,
Yeah.
Stephen, it was great talking to you, man. I really enjoyed it, and I'm sure our viewers. You know what's one of the great things I think I found about this Twitter is that the more technical we get, the more people are actually into the content. So they like this in-depth content. It's not just about memes and quantum cats or whatever. They want actually they'd like to understand. So I think there's this thirst for knowledge out there.
Yeah, that's great. That's great.
Okay,
It's
Stephen, thank you very much. I'm going to end it here, and I'll upload it and we'll put it out. Thanks.
all right. Thanks for
Thanks.
all the help with my
Thanks.
follow
Bye.
account
Thanks.
too.
Bye.
Okay, bye.
Bye.